What is going on, guys? Today I want to talk about supply and demand, how I spot it, how I chart it, how to use it. So yeah, let's pretty much just dive right into it. I want to do a live example, and that's why I'm on Bitcoin right now, because it is Saturday, the markets are closed. I do spot a little supply zone right here, and I'm gonna just kind of dry right now and explain to you guys. So I'm on a 3-minute time frame, and the most important thing is whatever time frame you're on, that is going to determine the strength, how long you hold your trade for, and how to react to the zone, right? Since we're on a lower time frame, we're not exactly looking for a whole day trade. We're not looking for like a 4-hour trade. We're looking for maybe a 5 to 10 to 15, 20-minute trade at max. And that is because these lower time frames will disrespect these zones a lot of the times. But when they do work out, you do have a opportunity to scalp the market. So I'm on a 3-minute time frame. Why? Because I've been liking the 3-minute more than the 5-minute as of lately for my lower time frames. So essentially, for a supply zone, you want to look for areas that we wick off of a lot, if that makes sense. So right here, you can see, I'll try to zoom in. We are wicking a lot here. We have one wick there, one wick there, one wick there, one right here, one right here, and these over here. So with that being said, we are going to mark this out from this wick to the bottom wick. Right now, this is now our zone that we're going to be playing. Now, essentially, for this type of setup, what you're waiting for and what you're looking for is for a price to dip back into the supply zone, and you play the reject, you play the support. You're basically just playing the move off of this zone. Now, just because it is a supply zone or it is a demand zone doesn't mean you're gonna play that one side. Just because it's a supply zone doesn't mean you're gonna play the upside. Just because it's a demand zone doesn't mean you're gonna play the downside. These are simply just zones to help you find an edge and a confluence in your trades. So essentially, what you're waiting for and what you're looking for here is for a price to dip back into the supply zone, consolidate, and play around in the zone. And you either play the breakout of the zone, so the top of the zone, right? Or you want to do the opposite and play the breakout of the lower level to the downside, right? And another way I like to use these zones, I like to double up and pair them with my key level. So for example, let's just go back in time, see what we see. I see this wick down here, right? This wick right here is going to be used as a support level. And you can see it actually lines up with our supply zone pretty fucking well. So I'm going to extend this left just to show you guys. We're going to go in our lower time frames and see what happens. We dipped into the zone. What happened? Price shot up. That is almost a perfect example of a supply zone. So you can see price came up, retested. Let's go in our lower time frame. Came up, price came back down, retested the supply zone, and bounced up, right? Price dipped in, came out, retested, big bounce, right? Kind of dipped back into it a little bit. Price is still continuing upside, okay? That is pretty much how you would play a supply zone. See if we can find a demand zone. Okay, yeah. This is going to be a little bit of a bigger zone. Now this is a bigger zone because I'm on a bigger time frame. You can see we're on the 20-minute time frame, and I am just trying to capture as many wicks as I can as possible. If I were to stretch it out all the way over here, this would be a long shot, to be honest. That is a little bit too much in my opinion. Yes, it could work. Yes, it could be true. Yes, you could do a zone like this, right? Let's try to see if we have retested any of these zones in the past. We're on a daily time frame. Well, would you look at that? Can't make this up. Demand zone came up, touched it, price absolutely shitted. Okay. Look what happened here. 1, 2, 3. Now it's being used as support over here. We came up, dipped into it, bounced off. Right? Oh, tell me this is another one. Look at that. That's just perfect right there. That is the power of demand zones. Anyways, let's go back to where we are now. So yeah, you kind of could double up on these zones, but I would only be looking to play one, to be honest. If I had to choose one, it would probably be this top one, just because it looks stronger to me and it is higher in price, so it's more likely to reject because we will probably be getting farther away from these EMAs, and it's just more confluence to play the downside. So exactly what I was talking about with our supply zones, you're going to do the same for demand zones. You can see price did come up. Find the tool, please. This is an awkward moment. Awkward moment. Awkward fucking moment. Where's the arrow? Right. So you can see price came up to the zone, tapped it. Where did price go? Right? And again, what happened? Price came up, touched it. What happened? Straight to our other supply zone. Touched it. Now we're bouncing back up. That is probably the simplest way that I could sort of explain supply and demand. This is another really good example over here. 3-minute time frame. We used it, kept bouncing off of this little area. Bounce up, bounce up, bounce up. Broke this level, fell through, came back up to it, broke out of it, bounced up. Same thing here. Touched it once, bounced up, broke it, fell through. Right? This supply zone over here, you can see we're wicking off of it even on our lower time frames. Bounced up, bounced up, bounced up. And this zone comes from all the way over here. And you can see how well it worked here, how we consolidated around it and fell through. right? Boom, this one comes from all the way over here. Bottom of this wick, top of this wick. What happened? We touched it, we bounced. Same thing over here. Kind of just chopped around here. This is probably like Asia, but you can see overall we came up, touched it, rejected it, fell through, came up, touched it, rejected it, came up, touched it, rejected it, fell through, right? Could show you even more examples. Came up, touched it, fell through, bounced off of it. You guys get the point now, right? Right? Come on, man. Another one right here, just waiting to be used. That's really my kind of best explanation on supply and demand. Just look for those wicks that line up with each other, mark out a zone, extend left and right, see how it has played in the past. If it's reacted really well, it's something worth looking for. It's something worth keeping on your chart. Wait for price to dip into your zone. Play the bounce, play the reject. You really want to be playing the exit of the zone, whether that's upside or downside. Unless you have all your other confluences that tell you when we dip into the zone, we're going to bounce, we're going to reject. If you have a key level at the bottom of the zone, you have order flow, you have order stacked at the bottom of the zone, you have a trend line there lining up, you are certain that it's going to bounce. Try to get that best fill at the bottom of the zone to play the upside. Do the exact opposite for the downside. You have a key level at the top of the zone. You have order stacked at the top of the zone. You have a trend line forming at the top of the zone. You know it's going to reject. You know it's going to fall through. Get that best entry, okay? Get the best entry at the top of the zone. Short it. Oh, fuck. Now, another thing to talk about is your stop loss on these. Now, what would be optimal is if you have a key level, a couple points away, 2-4 points away is kind of the general stop loss that you want to have, at least with ES, just because you know you're going to be wrong 2 to 4 points away. Personally, I keep a 2 to 3 point stop loss just because if I'm wrong, hey, I'm wrong. If I'm right and I get stopped out, guess what? I can get a better entry. You just have to wait and see. It's really about being patient, bro. If you're patient, wait for your setup, you will be profitable. Develop a strategy. Fucking put it to work. Be patient. Wait for that setup. You might not find it every day. You might not trade every day. Okay? But when you find that setup and you take that trade and you win, you're going to know, hey, this is my setup. This is what working for me. I'm going to look for this. I'm going to keep looking for this because, hey, guess what? My win rate is going to be so much bigger, so much better if I find the setup and I know it works out for me. Yeah, man. I'm done yapping. Hope you guys learned something today, and I'll see you guys in the next video.